The landscape of global trade, it feels incredibly dynamic right now, doesn't it?
It really does.
Almost like these tectonic plates are shifting under our feet. And, these shifts, they're creating some really unexpected, fascinating opportunities.
Yeah, absolutely.
Today, we're zeroing in on one of those. The Indian Electronics Manufacturing Services sector, or EMS. We want to unpack how India is positioning itself amidst this whole changing global tariff environment.
Mm.
Specifically, the ripple effects of the U.S. tariffs on China.
Exactly. And we've got a really compelling set of insights for this. Our exploration today, it draws from a deep dive into an expert session with Mr. Pankaj Mohindroo.
Ah, yeah.
He's the chairman of the India Cellular and Electronics Association, ICEA, so he's truly at the forefront of the Indian electronics industry. A key voice, really.
A major player. Definitely shaping India's journey towards becoming a major manufacturing hub.
Precisely.
And to add another layer here, we're also looking at a recent research report from Systematix Institutional Equities.
That's right.
They offer a really optimistic perspective on the EMS sector, highlighting both near-term seasonal factors and some pretty significant longer-term structural trends that seem to be playing out in India's favor.
Yeah, it's quite positive. So for everyone listening, the mission, let's say, of this deep dive is to get a clear understanding of how India's electronic sector really stands to capitalize on these global realignments.
Right.
We want to pinpoint the crucial factors driving this potential growth and, give you a more informed view of what the future might hold.
Mr. Mahindra, as you said, he's right in the thick of it with ICE, a real champion for India's manufacturing ambitions.
Mm-hmm.
And that Systematix report, it really seems to reinforce that upbeat outlook, pointing to some powerful tailwinds for the EMS sector.
Definitely seeing alignment there.
Okay, let's unpack this then. We're currently in this 90-day tariff pause from the U.S. on certain Chinese goods. Mr. Mahindra had some interesting thoughts on whether this would spark, an immediate jump in exports from India to the U.S.
Well, what's fascinating is his practical take on it. He clarified that a sudden surge of exports to the U.S. within this 90-day window is actually quite unlikely.
Oh, really? Why is that?
His logic is pretty straightforward. The majority of electronic goods that could be shipped from India to the U.S. have, in fact, already been dispatched.
Ah, okay. So the pipelines were already full, essentially.
Pretty much. So the immediate impact on export numbers might be less dramatic than, some might anticipate.
Ah, that's a really insightful point. I hadn't quite considered the lead times like that, but he did raise a really interesting point about India's logistics efficiency.
Yes, especially Chennai Airport.
Right, Chennai. Apparently they're seeing some remarkably fast clearance times there, down to as little as 4 hours sometimes.
Incredible, isn't it?
That's significantly quicker than even China. Why is that so significant?
Well, that 4-hour clearance at Chennai, which is, as you said, remarkable, it translates directly into lower warehousing costs and faster delivery cycles for U.S. retailers.
Ah, okay. Real bottom line impact.
Exactly. It's a tangible advantage that other nations will struggle to replicate quickly. It offers a real window of opportunity for Indian exporters. Mr. Mohindroo highlighted how this speed actually helped India fulfill U.S. orders quite rapidly.
So potentially keeping shelves stocked until May, he mentioned.
That was the idea. This agility in the supply chain, it's a considerable competitive edge.
And it wasn't just speed, was it? He also pointed out that between February and March, India actually had a temporary tariff advantage over China.
That's right, because the U.S. tariff increases were staggered.
So Indian goods landing in the U.S. during that period faced relatively lower tariffs compared to Chinese goods.
Exactly. And it seems that brief window of opportunity was, well utilized.
Good.
However, Mr. Mohindroo really stressed that to truly solidify these benefits for the long term, the crucial element is a swift conclusion of a bilateral trade agreement between India and the U.S.
Right, that makes sense.
Without that, any advantage India currently holds could just, evaporate as other countries become more competitive.
Right, so it's a bit of a race against time then. Now, another point that often comes up in these kinds of discussions is the potential for Chinese companies to try and, get around tariffs by dumping finished electronics into India at really low prices. Mr. Mohindroo had a pretty firm stance on this, didn't he?
He did, yes. He categorically denied the likelihood of China engaging in widespread dumping of finished electronics products in India.
Categorically denied it.
With a couple of specific exceptions, maybe in IT hardware, things like laptops, tablets.
Okay.
But even there, he pointed out these are largely sold by major global brands, HP, Dell. They generally maintain consistent pricing globally. They aren't likely to engage in systematic dumping.
He also drew a really important distinction, I thought, between dumping and what he called diversion. Could you elaborate on that for us?
Certainly. Mr. Mohindroo explained that what we're more likely to see is this diversion. That's where companies currently manufacturing in China will strategically shift their supply chains to new locations.
Like India or Vietnam.
India and Vietnam are prime examples, yes. This isn't about flooding the Indian market with artificially cheap goods to harm local producers. That's the classic definition of dumping, right?
Right. Predatory pricing.
Exactly. Diversion is more of a longer-term strategic move, adjusting their manufacturing footprint because the tariff environment is changing.
So it's a more calculated, strategic relocation of production, not some sudden fire sale of goods.
Precisely.
He also touched on India's existing anti-dumping mechanisms. Are they really relevant in this scenario with these supply chain shifts?
Well, while India does have those mechanisms in place, Mr. Mohindroo indicated they aren't really designed for or directly applicable to the current situation of these broader supply chain realignments.
I see.
Dumping, as he defined it, that systematic long-term strategy targeting a specific industry that isn't what's primarily happening here, in his view. The current shifts are more about companies proactively adjusting their global manufacturing strategies.
Okay, that clarifies that distinction quite well. Let's zoom out a bit now and look at the bigger picture, the tariff opportunity itself, and the broader strategic landscape. How do these relatively higher tariffs on goods coming from China potentially reshape global supply chains in a more fundamental way?
What's fundamental to understand here, I think, is that when tariffs on goods from one country, like China, become significantly higher compared to another, like India, it fundamentally alters the cost calculation for companies.
Changes the whole equation.
It does. And Mr. Mohindroo emphasized that this disruption creates a dramatic opportunity for countries like India to attract that manufacturing.
And he really stressed the urgency for India to seize this moment, didn't he? To address some of its long-standing economic and regulatory fault lines, as he put it.
Yes, the ones that have historically hindered its ability to fully participate in global trade.
Right.
That's a crucial point he made. He argued that Indian firms have often been quite conservative, maybe, when it comes to expanding their global footprint.
A bit hesitant.
Perhaps. And that this moment demands a significant shift in mindset. They need to become more proactive, more outward-looking, and really embrace the opportunities that are now presenting themselves.
It feels like the current geopolitical tensions we're seeing have also played a pretty big role in creating this opening for India in electronics manufacturing.
Oh, undoubtedly.
Effectively positioning it as a more reliable, maybe, and scalable alternative to China for many global companies.
Absolutely. The shifting geopolitical landscape has definitely influenced perceptions. India is increasingly being viewed not just as a potential manufacturing base, but as a viable and, importantly, a stable alternative.
Especially for companies looking to diversify production.
Particularly for those targeting the lucrative U.S. market, yes.
Which naturally leads us to this topic of global supply chain realignment. It sounds like for companies primarily focused on the U.S. market, moving at least some portion of their production out of China is becoming less optional, more necessary.
That's the direction Mr. Mohindroo is certainly highlighting. Look, China will undoubtedly remain a massive and critical manufacturing hub.
Of course.
Especially for its own vast domestic market and for other regions globally. But the production specifically destined for the U.S., that's increasingly looking at alternative locations, like India.
And it's not just about India being a place for final assembly anymore, is it? The perception seems to be evolving.
That's a key shift.
Towards India becoming a more comprehensive, integrated supply chain hub.
Precisely. Multinational corporations are starting to recognize India's potential to host a much broader spectrum of manufacturing activities, moving beyond just, putting the final pieces together.
To encompass more of the crucial component and subassembly ecosystem.
Exactly that.
But for this potential to truly materialize at a significant scale, what are some of the key areas India urgently needs to focus on, needs to improve?
Yes, Mr. Mohindroo underscored several absolutely critical areas. Improving the overall ease of doing business, that's huge.
Always a big one.
Streamlining often complex and bureaucratic regulations and enhancing incentive programs for manufacturers. These are all fundamentally vital.
And he warned about complacency here.
He did. He cautioned that while India has gained an initial advantage, it's a relay race, as he called it. Other nations like Vietnam and Mexico are rapidly catching up.
So swift and decisive action is crucial.
Absolutely critical for India to maintain and build upon its current lead.
That sense of urgency is definitely palpable.
Hmm?
Okay, now let's shift focus a bit to specific manufacturing plans, investment prospects. We know major players like Samsung, Apple, they already have a significant presence in India. What's the expected trajectory for them? And for others looking to establish or expand?
Well, Mr. Mohindroo suggested that while companies already in India might see some, let's say, natural expansion of existing facilities,
Okay.
major immediate capital expenditure CapEx decisions on entirely new large-scale plants might be somewhat cautious.
Waiting to see how things shake out.
Exactly. Waiting until the 90-day tariff window concludes and there's greater clarity on the long-term U.S.-China trade relationship and potentially the U.S.-India one, too.
But he did highlight a particular segment where we might see more immediate significant activity.
Yeah.
Subassemblies and components. Why there?
Yes, that's where he anticipates the real near-term momentum, establishing manufacturing for things like display modules, camera modules, battery cells, printed circuit boards, PCBs that can happen relatively quickly,
How quickly?
typically within a 3 to 6 month time frame. More complex core components, on the other hand, might take a bit longer, maybe 9 to 12 months.
And he specifically emphasized the importance of the Indian government's production-linked incentive schemes, the PLI schemes, for components and subassemblies,
Called them really timely and significant.
in supporting this specific area of development.
He stressed that these PLI schemes are absolutely crucial in making India more attractive for component manufacturing compared to other potential locations.
Gives them an edge.
It provides a vital layer of financial support, effectively de-risking investments in this crucial segment of the electronics value chain. He also noted, interestingly, that large-scale CapEx investments in the U.S. itself for high-volume electronics like iPhones are unlikely immediately.
But maybe semiconductors could be a starting point there.
That's what he suggested, yes.
Mhm.
Could potentially start with the semiconductor sector in the U.S.
Which naturally brings us to the discussion around component policy and the much talked about potential for semiconductor fabrication plants, fabs in India. There's a lot of buzz around that.
There certainly is.
How does that fit into this immediate picture we're painting?
So Mr. Mohindroo clarified an important point.
Yeah.
The current PLI scheme, the one driving growth in components and subassemblies right now,
Yes.
does not actually include coverage for semiconductor fabrication, for fabs.
Oh, okay. That's a key distinction.
It is. He mentioned that Semicon 2.0, which is a separate initiative focused specifically on attracting those substantial investments and establishing complex fab facilities, that's still under discussion, still under development as part of India's longer-term industrial strategy.
So fabs are definitely a long-term strategic goal, but the more immediate opportunity, the one presented by these global geopolitical shifts, lies mainly in expanding subassembly and component manufacturing.
Exactly. Mr. Mohindroo made that key distinction. While semiconductor fabs are undoubtedly critical for India's long-term tech self-reliance and deepening the whole ecosystem,
Right.
the immediate geopolitical dynamics offer a more rapid route to elevating India's status in global electronics manufacturing. By strategically focusing on these more readily achievable areas, subassemblies, components.
Without the massive upfront investments and the really long timelines you typically see with state-of-the-art fabs.
Precisely. It's a faster way to gain ground right now.
It certainly sounds like he holds a very, very confident outlook for the Indian electronics manufacturing sector overall. What kind of growth trajectory is he actually envisioning?
His confidence is, very strong. He projects a clear up-only trajectory for the sector, forecasting a substantial increase from the current valuation of around, USD 140 billion?
Yeah, around there.
To a staggering USD 500 billion by 2030.
Wow, 500 billion, that's huge.
It's transformative. And within that growth, he anticipates mobile phone manufacturing alone could potentially reach USD 100 billion.
100 billion just in mobiles. That really puts the scale into perspective.
It really does.
And what's his assessment of the likelihood of that favorable bilateral trade agreement with the U.S. actually, coming together?
He assigned a very high probability, around 90%.
90%. That's very optimistic.
It is. He cited the unified and strategically aligned approach being adopted by all the relevant stakeholders, government ministries, key industry players, as the primary reason for this considerable optimism.
So the overall sense is there's a very focused, very coordinated effort underway to really capitalize on this unique moment
Hmm.
and secure lasting long-term gains for India in the global electronics landscape.
Precisely. It's not just about reacting to immediate disruptions.
Hmm.
There seems to be a deliberate, forward-thinking, strategic approach in play.
Okay, now let's bring in that perspective from the Systematix report, just to complement Mr. Mohindro's insights. How does their analysis of the EMS sector align with what he shared?
Well, the Systematix report offers a more near-term, financially focused lens on the EMS sector.
Mm.
And, it largely reinforces the optimistic outlook Mr. Mohindroo presented.
Okay.
They anticipate robust revenue growth for the EMS companies under their coverage, projecting a significant 88% year-on-year increase in revenue for Q4 FY25.
Wow, an 88% jump year on year. That is substantial. What are the primary factors they attribute this impressive near-term growth to?
They highlight a couple of key drivers. Firstly, strong channel filling ahead of the summer season, particularly in room air conditioners, typical seasonal demand kicking in there.
Right, ACs.
And secondly, they foresee continued healthy volume growth within the mobile phone category.
And they even pointed to some specific companies within EMS expected to report particularly strong growth figures for this quarter.
Yes, they did. They specifically mentioned Dixon Technologies, projecting a remarkable 159% revenue growth for them,
159%.
largely fueled by the big ramp-up in their mobile phone production volumes. Then there's Kane's Technology, expected to see a substantial 67% increase, driven by executing their smart meter orders.
Okay.
Avalon Technologies looking at a healthy 43% growth, benefiting from a recovery in their U.S. business and onboarding new clients. And Surma SGS Technology, projected to grow by 29%, with an anticipated expansion in their EBITDA margin,
Their profitability, yeah.
which is always key.
It's really interesting to see that these near-term financial projections in the Systematix report seem to line up so strongly with the broader positive outlook that Mr. Mohindroo articulated.
It does suggest that these larger structural shifts are already starting to translate into tangible results for companies in the sector.
Seems like it.
Exactly. The Systematix report explicitly states they maintain a positive stance on the EMS sector overall, citing the strong underlying structural tailwinds and the supportive policy initiatives from the Indian government.
Really echoes Mr. Mohindroo's central point, doesn't it?
It really does. About India firmly establishing itself as a significant global hub for electronics manufacturing.
And they also pointed out some specific positive factors likely to benefit individual companies within the sector, going beyond just the headline revenue numbers.
Yeah, they dug a bit deeper. They noted Kane's Technology's strategic focus on building a strong domestic semiconductor ecosystem positions them favorably, especially as they're one of the few approved for OSAT that's outsourced semiconductor assembly and test.
Ah, the OSAT segment.
Yeah.
Important.
Very. For Dixon, they highlighted its successful diversification beyond just smartphones into other high-potential areas like display modules and IT hardware manufacturing.
Smart move.
PGEL and AMBER are expected to continue benefiting from sustained strong demand for room air conditioners. And E-Line Electronics is poised to gain from the recent end of an exclusivity agreement in LEDs, plus a revival in demand for small domestic appliances.
Which could potentially help their profit margin.
Exactly. That could lead to improvements there.
So it paints a pretty comprehensive picture. Robust growth across various segments and for a number of key players within Indian EMS.
Yes, the Systematix report really provides a tangible near-term validation of that broader strategic optimism that Mr. Mohindroo articulated.
Okay, so bringing it all together then, it seems quite clear that India's electronics sector currently stands at a really significant juncture.
A pivotal moment.
A substantial opportunity to capitalize on these ongoing global supply chain realignments, largely spurred by the U.S.-China tariff situation. And that strategic focus on expanding component and subassembly manufacturing seems key for immediate, impactful growth.
Absolutely. And while securing a swift, favorable bilateral trade agreement with the U.S. is undoubtedly crucial for sustaining long-term benefits.
It's the linchpin, really.
It really is. But the underlying policy support from the Indian government, combined with the clear optimism and strategic focus of industry leaders like Mr. Mohindroo, it certainly points towards a period of considerable growth and transformation for the sector in the coming years.
And the fact that both Mr. Mohindroo's strong confidence in that up-only growth trajectory
Yeah, quite a statement.
and the Systematix report's positive near-term financial outlook are so well aligned, it really underscores the significant potential that exists, doesn't it?
It does. It's a compelling confluence of factors. You've got global economic events, strategic government policy, and strong industry dynamism, all seemingly pointing in the same positive direction for the Indian EMS sector.
So, considering all these significant shifts, all these potential opportunities, it really makes you think about the long-term implications, not just for India, but for the global electronics landscape.
Definitely.
You know, how might India's role evolve beyond just being a major manufacturing hub? Will we see a greater emphasis perhaps on domestic innovation in electronics, a significant surge in domestic consumption of these products?
Good questions.
And ultimately, how will all of this shape India's overall position in the global economy in the years to come? Some truly fascinating questions to mull over.